How to Start Investing Beginners, 2023. Here's a potential outline for Beginner's Guide to Investing. Introduction. Definition of investing. Why it's important. Different types of investments. Setting investment goals. 2. Understanding the stock market. Definition of the stock market. How it works. Risks and rewards of investing in stocks. Different ways to invest in stocks. 3. Investing in mutual funds. Definition of mutual funds. How they work. Advantages and disadvantages. Different types of mutual funds. 4. Building a diversified portfolio. Importance of diversification. Building a diversified portfolio. Different investment options. Rebalancing your portfolio. Understanding risk management. Importance of risk management. Different types of risk. Strategies for managing risk. 6. Making your first investment. Steps to make your first investment. Choosing a broker. How to open a brokerage account. Making your first investment. Let's see brief explanation of Investing 2023 for beginner. Remember, investing involves risk and there's no guarantee of a return, so it's important to do your own research, understand your personal financial situation and consult a financial advisor before making investment decisions. For beginner investors, there are several types of investment options that offer relatively low risk and the potential for modest returns. Savings accounts and CDs, low-risk options that offer relatively low returns, but with guaranteed principal. Bond funds, investment funds that hold a diversified portfolio of bonds and offer regular income in the form of interest payments. Exchange-traded funds, ETFs, a type of investment fund that holds a basket of stocks, bonds, or other securities and can be bought and sold like individual stocks. Index funds, investment funds that track a stock market index, such as the S&P 500, and offer exposure to a broad range of stocks. Robo-advisors, automated investment platforms that use algorithms to construct and manage a portfolio of investments for you. Remember, it's important to understand the risks and potential returns of each type of investment before making a decision, and consider consulting a financial advisor for personalized advice. Risk management in investing involves identifying, assessing, and controlling risks to optimize the likelihood of achieving investment goals. Here are some key elements of risk management in investing. Identifying risks. This involves recognizing the different types of risk that can impact investments, such as market risk, credit risk, and interest rate risk. Assessing risks. This involves evaluating the likelihood and impact of different risks on the portfolio and determining the appropriate level of risk tolerance. Controlling risks. This involves implementing strategies to mitigate or manage risks, such as diversification, asset allocation, and stop-loss orders. Monitoring and reviewing. Ongoing monitoring and regular review of the portfolio can help detect and respond to changes in market conditions and shifts in risk levels. Adjusting the strategy. As circumstances change and new information becomes available, it may be necessary to adjust the risk management strategy to align with current market conditions and investment goals. Risk management is a critical aspect of investing and can help to maximize returns while minimizing the likelihood of significant losses. It's important to remember that no investment strategy can completely eliminate risk, but by implementing a well-designed risk management plan, you can improve your chances of achieving investment. A conclusion in the context of investing would summarize the key takeaways from the investment process and provide some final thoughts or recommendations. Here are some elements that could be included in the conclusion of an investment guide. Summary of main points. A brief overview of the main concepts and strategies discussed in the guide, such as setting investment goals, understanding the stock market, building a diversified portfolio, and managing risk. Final thoughts, a discussion of any additional considerations or tips for successful investing, such as the importance of staying disciplined, doing research, and being patient. Encouragement to start investing, a message of encouragement to take action and start investing, highlighting the potential benefits of investing for the future and the importance of taking control of one's. A reminder that investing involves risk and that past performance is not a guarantee of future results, and a recommendation to consult a financial advisor before making investment decisions. The conclusion should provide a clear and concise summary of the investment guide, offering practical insights and actionable advice for beginner investors. It's important to emphasize the importance of taking a long-term approach and being mindful of the risks involved in investing.